I'm a real estate agent and I'm telling you, do not buy a house in today's real estate market unless you have the three things that we're going to talk about in today's video. Right now is definitely a time to be cautious in the housing market. We're seeing inflation continuing to rise. We're seeing the Fed come out and adjust the Fed funds rate. At the same time, interest rates are continuing to rise. We're hearing home buyers backing out of contracts with builders, homes sitting on the market longer, home prices crashing. It's everywhere. And those are reasons to be cautious. But at the same time, those are not reasons that you shouldn't buy a house. Buying a house isn't about timing the market. It's about time in the market. And it's about buying when it's the right time for you. So in today's video, I want to spend a little bit of time and talk about some of these things. So as a potential home buyer out there, you can make the right decision for yourself. As a real estate agent, I often have people commenting on my videos, sending me DMs, basically saying that you're just continuing to pump housing because you get paid. Understand, my audience is nationwide. I don't get paid whether you buy or sell a house in Virginia. My goal with the channel is not to get you to buy anything. My goal is to inform you and to educate you so that you can make the right decisions. At the moment, there's a lot of people on YouTube and other media platforms telling you not to buy real estate because it's going to crash by 20 or 30%. When in all reality, you're likely to see home prices decline, but not significantly. In some markets, you're going to see more of a sideways movement. In other markets, you might see home prices move down 10% or so. But at the same time, you have to understand where we came from. Prior to 2020, the average appreciation in homes on a yearly basis was around 4.5% nationwide. And that's going back nearly 65 years. And then during 2020, 2021, and the first quarter of 2022, we saw appreciation somewhere between 35 and 40% for many markets out there. So we got really far away from that 4.5% trend that I mentioned just a moment ago. Now, during this time, inflation was getting out of control. There was a lot of money pumped into the economy by stimulus and with the Fed buying mortgage-backed securities and treasury bonds and taking interest rates below 3% for many well-qualified buyers out there. So there's just a lot of money in the economy. Well, when that money got spent, inflation went high, we had supply constraint issues, and we've got all of these things happening all at one time. Well, everybody has short memories, and while all of this is going on, you have a lot of people getting priced out of the housing market for one reason or another, which creates scary times when renters are having to pay 10, 15% more on their rent than just a year ago, and home buyers are buying property, 20, 25% more than it was just a couple of years ago. That's scary, especially for those that aren't in the market. And oftentimes, those people are wondering, will I ever be able to buy a house? And quite frankly, those are the people that are out there touting a housing market crash, the people that have been priced out of the market, the people that are scared of the market. And then also you have those that are actually making money off spreading stuff like this in the market. Believe it or not, spreading fear actually pays really well, especially on platforms like YouTube, because fear drives views and views drive dollars. And so the more views you get on crash style videos, the more money someone makes, and in turn, more people see that and want to reproduce it and do the same thing and make the same amount of money. So then you have a lot of people making those style videos just to get paid, when in all reality, the market is moving back to a more normal market. Now, I know when people hear me say a normal market, they say, Jeb, this market is anything but normal. With interest rates rising, with homes sitting on the market, price drops happening. But understand, all of those things I just mentioned typically happen in a normal market. Maybe they don't happen as fast as they've happened this year, with interest rates nearly doubling in just a couple of months, which is really what put the brakes on demand in the market, causing homes to sit on the market a little bit longer. But at the same time, just because demand has slowed doesn't mean homes have to crash. In fact, you need two things to happen in order for homes to crash. And at the moment, we have neither of them. The first is you need excess inventory. You need a lot of homes coming to the market. And just recently, we actually saw inventory stall and start to pull back. And on top of that, you need distressed sales, people that are hurting, people that don't have equity in their property. And at the moment, you have neither of them. You don't have excess inventory and you don't have distressed sales. So the likelihood of a market crash happening is near zero. What you're more likely to see is home prices continue to pull back. Homes probably sell closer to where they were selling at the end of 2021. Now, homes did go up a lot in the first quarter, but I could see that part of the market being the last run up with regards to appreciation, and homes that are selling now are probably selling closer to the time before we saw that last bit of run up, which means that you might see a home sell for less than the last closed comp in a neighborhood, depending on where it's sold. But that in no way means a housing crash. But if you are considering buying in this market, there are three things that you absolutely have to have. And the very first one is a longer term time horizon. Because of all of the things I just mentioned, you need to be thinking 5-7 years out from now. And that's not because I believe a crash is coming, like I mentioned just a few moments ago in the video. It's more because I think home prices can move sideways, maybe even down in some markets for an extended period of time, because we're playing catch up. We need to get back closer to that trend of appreciation that we've been talking about earlier in the video. The second thing that you absolutely have to have is money in the bank. You shouldn't be using every dollar that you have to buy a property. You know, if it takes all your money for the down payment and the closing cost, I would recommend not buying a property until you have some money in reserves. You need that emergency fund, you know, that Dave Ramsey talks about. You need to have some additional money just in case something happens. What happens if you lose your job? Or what happens if your spouse loses their job and you lose one of the incomes? You need to be able to have some money to continue making that payment if things change at all. And the last thing is you need to not be stretching yourself. You don't want every single dollar of your monthly income going towards the housing payment, even if you qualify for it. Now, oftentimes I know home buyers have other jobs, other incomes that they're not reporting, and therefore they're able to stretch that debt to income ratio. But you know your finances. You need to create a budget and see what you're comfortable with so that you're not putting yourself in a position where you're house poor. It sucks knowing that you can't do things that you want to do because that money is now tied up because it has to go towards your housing payment. If you do that, you're going to end up regretting, resenting buying that property. It's going to create frustration in your life, and you might be in a position where you end up selling it in a shorter time frame than you originally thought, which could end up changing that longer term time horizon that I mentioned earlier in the video. Now, something I want to be super clear on in this video, I'm super bullish on housing. I know what it creates long term. I know the generational wealth it can create for a family, the stability it can create, all the positive things it can do. So when I say don't buy a house, I'm not trying to dissuade you from buying property. I'm just trying to make sure that you have these things in mind so that it's something you consider when making that decision. Also, the reason I'm so passionate about education on the three things that I mentioned in this video is because I've made these mistakes myself and I've lost a lot of money doing it. And you can watch that video right here.